What if I told you that the Evergrande crisis that is going on right now is just a distraction for something that is much worse that is already happening beneath the surface right now? I'm sure you've been seeing videos in all of the media everywhere about Evergrande and how it could cause the next financial crisis, and I've done many videos on this and I think it definitely could, but there's actually something much bigger that is happening, and this is contributing to the Evergrande crisis and what created it. And if this continues, this other crisis that is happening will make Evergrande look like peanuts. In this video, I'm going to show you what's really happening in China, what's really happening with the Chinese Communist Party, and other risks that are happening in the Chinese economy, which is going to have devastating effects for the global economy and economies like the US and economies like us in Australia. Okay, everybody, let's not waste any time. Let's get straight into it. So something that's going on in China, which has been happening for a while now, and this is what's led to the Evergrande crisis, is this. Look at this, everybody. China's tech giants, they've wiped out $823 billion out of the Chinese stock market, the US stock market, Hong Kong stock market, etc. And it's not over yet. And I'm sure you've seen titles like Evergrande, the $300 billion debt crisis, which is definitely going to have consequences on the Chinese real estate market. It could have problems in the banking sector, and it could cause contagion, which could lead to another financial crisis. But this is happening at the same time in China. There's a huge crackdown on tech companies. And as you can see, already over $800 billion has been wiped out compared with Evergrande, or Evergrande, however you want to pronounce it. Some people saying Evergrande, Evergrande. But this makes Evergrande's crisis look like peanuts. And something that we have to know in the West that is very different in China. Everyone's talking about, that the Chinese government will bail them out. The central bankers will bail out these company. People, China is very different to the West. And they actually wanted this to happen. The real estate market and the speculation in the stock market in China was getting out of control. And in China, the Chinese Communist Party, they want power and they want control first, and a booming economy second. Because look at this, everybody. Some of the losses in these Chinese tech giants, as we can see, Tencent, they've lost nearly $300 billion. Alibaba, actually, as we're recording this now, they've lost over $400 billion in market cap. And we can see all the other companies with huge losses as well. Because what have we been seeing? We saw what happened with Jack Ma, one of China's richest men, and then he went missing. And now when he's come back in the spotlight, look what he's doing now all of a sudden. That's right, Alibaba, they're being very generous all of a sudden. Jack Ma's gone from criticizing the CCP to now he pledges $15.5 billion to China's Common Prosperity Drive, which on the surface, it seems great. Take from the rich, give to the poor. Well, really what's going on is taking from these big, huge tech giants, because the CCP, once anyone in China gets too much influence, they bring them back down to reality very quickly. And as we can see here, Alibaba, one of China's biggest companies, it's fallen over 50%, and it's now got a market cap of $400 billion when it used to be $800 billion. So what's happening with these tech companies is what could have created this issue with Chinese developers like Evergrande, because if they had money in these tech stocks to try to get returns on their cash, really good returns because the market was booming in 2020, then all of a sudden there's a 50% crash. Well, then they don't have that money there to cover their debt repayments that are looming ahead. Because something else is happening, people. The Hang Seng Tech Index, we can see here, it has fallen nearly 50%. It was nearly 1,100, or it did hit just about 1,100, when now it's fallen all the way down to 6,200. But this is just the tip of the iceberg, everybody. There's so much more going on in this huge clampdown in China right now. And let's now bring the tally up to $1 trillion in risk. China is now completely cracked down on the private tutoring industry, which is worth $140 billion. People in China, they pay people lots of money to tutor their child because they highly respect education, and education is a big thing for their children, and so they pay lots of money to get private tutoring. Now, this industry has become illegal, overnight. You can't do private tutoring for a profit in China anymore. And now look what's happening, everybody. We're starting to see the ripple effects. Another Chinese property developer, Cynic, halts trading after it crashed 87% in one day. That's right, in one day, not a week, not a year. Another crackdown. China has cracked down on the video game industry, which is a $100 billion industry in China. They've completely cracked down on this industry and they've limited gaming to just 3 hours a week. But wait, there's even more. China's very lucrative gambling industry in Macau, $24 billion has been wiped out so far, and I bet it's even more now after China has tightened its grip on gambling. So we're starting to get the picture here, everyone, and starting to see the CCP's agenda. They want to fully take over these huge mega corporations in China. They want to make them state-owned enterprises to fuel their socialist programs. But what is the biggest risk of all that is happening in China right now that will have devastating consequences for the global economy? And this dwarfs Evergrande's problems, and it'll make Evergrande's collapse look like child's play. This, everybody, China's housing market is the most expensive and biggest housing market in the world. It is worth $52 trillion. And when this bubble collapses, which is already starting to happen right now, we're going to see huge ripple effects throughout the world. Because look at it like this. Evergrande, that's $300 billion, one company. China's real estate market is valued at $52 trillion, and this was early 2020. It's even higher now, at least 10% higher. So we'll say $55 trillion it's worth. If values fall just 10%, that's $5.5 trillion in wealth wiped out like that. Now, what Evergrande is having to do and what many other developers are having to do is heavily discount their prices with all the issues that's going on right now. People are very worried about developers. They think they're going to go under, so they don't want to buy them. We're seeing Evergrande have to discount their apartments by 26%. So if we see a 20% fall in China's real estate housing market, well then that's going to be over $10 trillion of global wealth gone. Now when you add this up with the developers' wealth gone, when you add this up with the gaming industry, with the tech industry, with the education industry, we are looking at tens of trillions of dollars gone. That is equal to 100% of China's annual GDP. And if you think this isn't going to have effect on us in the West, you're fooling yourself. And what this could also cause is a banking crisis in China. Now, what you have to remember that's different in China compared to the US is a lot of this debt is in US dollars. So unlike the Federal Reserve, where they can just print more dollars and there's no issues, they can't print dollars. And if they print more and more yuan, which is what they're doing right now, they injected about another $12 billion in the banking system today because of the crisis that's going on, because it is causing a liquidity crisis. If they have to keep printing more and more yuan, well then what does that do? It devalues the currency. So then they have to print more and more yuan to pay back the debt that is priced in dollars and pay back these bond interest payments that are in dollars. And Chinese companies have many other developments that are going on around the world. So if they go under, well then some developments in the US, in Australia, in Canada, etc. could go under as well. And so why everyone telling you that this Evergrande problem is just a $300 billion problem? People, it is a much bigger problem than that. We are talking in the trillions. And if there are big losses in China, then these investors may have to sell off other foreign assets like the US stock market. We're seeing a big sell-off in cryptocurrencies at the moment, and we may see them selling more other real estate around the world. So everyone, what I expect as this scenario plays out, we're going to see more and more issues come up. But everyone, what do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.